Yeah, it's a pleasure to be on this webinar today, and I know we have a very good audience who are very interested in this subject matter. So hopefully today, everyone, I will be able to share really some thoughts on what we see going forward in terms of Labour Party policy in relation to residential property. And then I'm going to sort of talk about the sort of general economic climate for property investing and what we see going forward. So just briefly, I'm just going to share a little bit of background to myself with IP Global. As Sonia alluded to, I've been with IP Global for 18 years now, since 2006. We are a global business. I actually spent 16 of those years in Hong Kong and Singapore. And I've been back in the UK for the last 2 years, just based just outside of Cambridge. As a summary of the business, we've transacted on, we put there $3 billion of property investment. So in pounds, that's about £2.5 billion of investment. We've sold over 6,000 properties across 18 countries, and we specialise in property investing in the UK, Germany, and Portugal, and the golden visa opportunities. All right, so let's just take a step back and see where we are in terms of Labour's plans for the property market, the residential property market going forward. Now, Labour has been in power for just over a month or so, and their plans are starting to become reasonably clear in terms of the property market. So let's just go over some of the main pointers here. So basically, as per their manifesto, they are looking to drive housing supply to about 1.5 million over the next parliament. So over the next 5 years, approximately looking to build round about 300,000 homes a year. Now, I think it's fair to say that they have quite a good plan. They have a integrated policy, a lot of joined up thinking. And they have very good intentions to get to this target. I think what we do have to bear in mind, though, is this will not be easy for them. I mean, if you look previously, there's about 24,299 social housing annually when Labour was last in government between 1997 and 2007. And they will face some sort of well-documented challenges that the Conservative government previously has had to face. Back in 2019, the Conservatives were planning to build again sort of 250,000 homes per year. Unfortunately, that target has never been reached, and there are some specific reasons for that. You know, obviously we had COVID. There were slow planning rules at that time. The lack of planning officers. You know, also in terms of one of the big issues in the UK as a democracy is NIMBYism, what they call not in my backyard. People do not want property necessarily built on their doorstep. And with the democratic process, there is a strong appeals process against building property. So that's one of the things that Labour is going to have to manage. That's one of the things that they are going to have to deal with. They do have some good plans to effectively try to involve local communities, offer better infrastructure and benefits to them relating to new builds so that actually they can get these planning applications through. So there is a lot of high-level thinking going on to hopefully improve on these build numbers. I think we also have to acknowledge that if you look at the previous Conservative government, there was basically 16 housing ministers in 13 years. And if you imagine the difficulties in terms of getting decisions done with that much change, you know, if Labour have Matthew Pennycock, the housing minister, in place for a number of years, then I'm sure actually they can make some very good progress. So what are they going to do in sort of specifics? Well, one of the things they're looking to do is recruit more planning officers. There is currently 18,000 planning officers. They're looking to increase that by, in the short term, 300. Now, 300 sounds a reasonable number, although it's only a 1.7% increase in those numbers. But it's a step in the right direction. More planning officers will certainly help the situation. The other point is they're looking to build on brownfield sites, often underutilized urban areas. These can be sort of shops, offices in high streets. They are essentially a quick win that can be done. There's also what they call the greyfield sites, which are brownfield sites on the borderline of Greenbelt, to sort of speed up the process. Now, if you like, one of the problems is the undersupply is actually focused in specific areas. It's very much London and outer London. It's Manchester, it's Birmingham, it's Edinburgh, and it's parts of the southwest. So it is targeted in certain areas. Indeed, 19 of the 27 undersupplied boroughs in the UK are in the London area. And basically, London is a big economic hub where lots of people are focused on coming to because of the economics. That presents challenges in itself to build property because there is competition between residential, commercial, and other forms of build, which means that it still will be tough to build in some of these most undersupplied areas for a whole host of economic factors. But again, as I say, at this early stage, there is a lot of high-level planning going on to try to overcome some of these challenges that the previous Conservative government has had to deal with in the last number of years. And then in terms of sort of stimulating the housing market in itself, they're looking to move forward with the mortgage guarantee scheme, freedom to buy, effectively helping first-time buyers get on the ladder. Now, first-time buyers are very much the catalyst to the housing market. So what we've seen to date is 95% mortgages offered, where in effect, the government is underwriting any shortfalls between 80% and the 95% loan to value, so that if there is any losses incurred, the government would pick those up. And that really cements confidence from lenders to lend to first-time buyers with just that very small deposit. Now, I think we'll see more sort of detail on what their specific plans are when we get to the autumn statement at the end of October in that line. But that will certainly help stimulate the growth, but most importantly, allow first-time buyers to look to get onto the property ladder. And just finally there, I'm going to touch on what we call the Rental Reform Act, which is something that will be planned to go through Parliament by Labour. The details are still currently being finalised. It was something that was initially proposed from the Conservative government previously. The Rental Reform Act is really there to protect renters, to further strengthen the rental market, rental rights. There are a number of different proposals, which I won't go through at this stage, but some of the proposals are to bring in an ombudsman to make sure the market is much more watertight from a regulatory point of view, allowing only one rental increase per year, making energy efficiency ratings in buildings at a minimum of C from an energy efficiency perspective, so that there is not undue costs for renters, and also no fault evictions to be curtailed, so that, in other words, landlords cannot just remove tenants whenever they want to. So greater security for landlords, and obviously this is a very, very positive factor. All right, so now I'm just going to take a step back and look at what's happened under Labour governments in more recent times, because there has always been a fear from some quarters that Labour is more anti-business, it is more focused on not protecting those who are keen to invest in property, etc. But that very much has been a myth from the past. They've done a lot of good things into the property markets. If you have a look at some of the data here, aside from the normal sort of economic ups and downs, if you go from 1962 to sort of 1978, periods of Labour government, you basically see that the market generally has trended upwards. There was a bit of a financial economic oil crisis in the early 70s, which was a normal sort of economic cycle, which would have happened under any government. And then if you look at most recently, when Labour took power in 1997 up until 2007, you see that sort of continual upward tick of property prices, which really only turned in 2008 during the financial crisis, when, of course, that affected the world globally. And actually, there was some very good stewardship under the Prime Minister at that time, Gordon Brown, who really did get a very strong safety net into the UK economy at that time. And then subsequently, the housing market rebounded. And then in conjunction with that, if you look at the graph on the right-hand side, in most recent times, so since 1997, when Tony Blair took over, that slide with the yellow line basically talks about the average amount of salary to property prices, where we've seen from, in effect, 3.55 times average salary in 1997, trending up to post 7 times average salary to buy a property in the sort of 2007 period, 2008. Now, obviously, there was a dip during the financial crisis, but the point being here is that property prices ticked up between 1997 and 2010, the time of the Labour government, and there was nothing that was to the detriment of the market through Labour Party policies outside of general economics. So, absolutely, I think we can be confident in terms of the Labour Party going forward for their plans for the property market. All right, so what sort of economic environment from a property perspective is the Labour Party inheriting? Well, we're all very much aware of fiscal challenges and the sort of debt burden in the UK, and a lot of the sort of austerity and challenges that could impact going forward. But if you look at actually with regard to property and what Labour Party is planning to do, rather fortuitously, it's actually quite an interesting cycle at this time. We've seen inflation go from 10% to just over 2%. Indeed, it's slightly ticked up this morning with the latest release of data. However, over the next couple of years, with the minutes that were released this morning, the trend will be for inflation to go down to around about 1.7% by 2027. Now, the point to make here is, in recent years, alongside the planning, slow planning rules, etc., the NIMBYism that I mentioned, one of the other issues has been developers have been reluctant to build because of higher inflation, because of interest rates being very high, and they've been less confident to sell property. So they've built less, they put less planning applications in, etc. In tandem with the fact that Labour has plans through brownfield development, etc., to stimulate the market, of course, what we're seeing now is more developers are keen to look to build property once more, because inflation has come off significantly. Those build materials have rapidly reduced, and we've seen the first interest rate cut in 4 years, which happened last month, and possibly 1 or 2 more to come. So that is good timing for what the Labour Party is planning to do. So we can certainly be optimistic on that. And as we can see from the graphs here, we can see how, there was 15 rate rises actually in recent times from the end of 2020 up until the point where they stabilized. And as I say, last month, there was the first cut in those 4-year period. And that's dovetailed with a year of inflation coming off from over 10%. So there is actually some very positive news there to actually help Labour Party with their new policies. Next slide, please, Sonia. All right, so what is the general state of the market? What's been happening? Well, I think we can safely say in recent times, it's certainly been pretty flat. We've seen a lot of people put off buying because of those higher interest rates. if we look at the very start of this year, we've seen a lot of commentators, Nationwide, Lloyds, Savills, Knight Frank, and others pointing to negative growth this year. However, what we've seen in the last, I would say, 6 to 8 weeks is much more positivity coming through. Actually, that started when the Labour government came into power on the 5th of July. The reason being is because it's actually from an overseas perspective initially, because with the big majority that the Labour Party got from overseas, when we're looking at Europe, the UK is now seen as one of the most stable governments. That's because of that big majority. When we compare to countries like France, who has been in a bit of a political mess, we have to say, with the various coalitions, etc. Business does not like uncertainty. Business likes certainty. And when we're looking at the UK, there is certainty from afar to invest. And that's where we've seen strengthening of the pound, which I'll come on to in a second, just to dovetail with that remark. Now, as I say, in terms of since Labour came into power, we've seen the fact that even in the month of July, we've seen transactions, residential transactions going to an offer stage in less than a month. That's about a 25% increase in the time it's taken, reduction to get to offer period, so more confidence for people to move forward with transactions. And if we look at the graph on the bottom right-hand side, we see the fact of the amount of overall days to sell property from around about January of this year has started to come off. Now, one of the reasons for that was in the start of this year, even though interest rates have not moved until July, what happened in January was there was a bit of a mortgage war that started on the financial market, swap rates. So the amount of pricing for lenders to buy into their mortgages started to come off, so they could price mortgages cheaper. That led to more competitive mortgaging, and basically, therefore, more people started to buy into the property market, and hence the number of days to complete a transaction has started to reduce, and we look to see that further happening once we get data in respect to the recent interest rate cut. But all of that is feeding through to some positivity, and as you can see on the left-hand side there, we see that Savills have upgraded their forecast from a 3% drop at the start of the year to a 2.5% rise going forward in the next 6 months of this year. Also, Knight Frank has indicated similarly. Now, we can always argue the toss with certain surveys, but even if you look on the detail here, going into 2025 and beyond, if you look at the Office for Fiscal Responsibility, even they are predicting going forward that this will be positive for the housing market. So there is a good sense of confidence coming into the market now, and certainly from our business perspective at IP Global, we have seen that after what we have to acknowledge has been a rather sort of challenging 18 months or so, but we are starting to see more transactions coming through now. Okay, so I just mentioned about the GBP, I mentioned about the pound strengthening, so we can actually use a specific slide here. So if we go back to early July, where the pound was sitting at around about 1.26 to the US dollar, we actually saw a jump on election day when Labour got elected because of the size of that majority, which was seen as clear confidence in the new government. There's no ambiguity, no coalitions, just pure certainty. And that's led to more strengthening. And when I checked today, it's sitting at just under 1.29 to the US dollar. So effectively, more confidence in the pound. Also more confidence in the pound because the GDP numbers were recently revised upwards, and Goldman Sachs and others have started to respond accordingly with expectations that there'll be further gains in the pound. And so from afar, and as a business, we deal with clients across Hong Kong, Singapore, and elsewhere, where the pound has been weak for quite some time. We see that strengthening is starting to see people look at the UK more favourably and looking to invest in the residential property market.